run through this candle formation. So in the first market, we have what the bearish candle and the bullish candle. Take note, the bearish candle is mainly the red candle you see on the major chart, and the bullish candle is the green candle. So the bearish candle is for a sell, is a sell candle, and the bullish candle is a buy candlestick. So when it comes to the bearish candle, candle normally opened above, it opens and close below. So, and we have what, a wick. This stick here is called wicks. So how does a wick form? First of all, when this candle open around this zone, the bull, because in the forex market it's a combination of what, a bull and a bear fight. Okay, we have buyers and seller all at the same time trying to buy and sell the market. So at the end of the day, if the market gives you a sell candle like this, a bearish candle, like, you know that okay, sellers are in the market, sellers are more than the buyers. That's why the candlestick printed is sell. So now, originally, a bearish candle normally open at the top. You can see the reason why this week is there is because the bull pushed it to the upside, and the bear, which is the sellers, came and pushed it back. You remember it opened around this zone, so it started creating what, a body, and they pushed it down to this point. The bull now push it, and the market close, the candle close around the zone. So this is considered our high, and this is considered our low. Most of the time candle always prints wick, either long or short wick in the market. Then this is the body for a bearish candle, and when it comes to bullish candle, it's the opposite. Okay, so in the bullish candle, the market usually open at the bottom here. As you can see, when the market opened, the bear pushed it to this zone here, and the bull came to the market and started pushing it. And you remember the market opened around this zone and started printing out body of the candle, and they pushed it to this zone, to this high here, and the bear later came to the market and pushed it, and the candle closed around the zone. So this is considered the high and the low. This is the wick. Take note of this. So when it comes to Malaysia scenario, we have different key levels. Okay, we have the V level, we have the A level, we have the open and close level, So the V level is considered what, a support level, and the A level is considered what, a resistance level. In the forex market, generally we have two zones, right? It's either you are buying or you are selling. If you're buying, it means you're buying from the support level. If you're selling, it means you're selling from the resistance level. So we'll talk about other flows and some other stuff, but for now, these are key levels. We have the open and close key levels. We have the A level, we have the V level. So a V level is a combination of what, a sell candle and a buy candle. This level here is called the V. We have different type of charts. Let me show you something. Don't know what's wrong with my. So okay, so we have different type of chart. We have what, the candle. I only use the candlestick. That's why I'm drawing all this candlestick for you, and line chart. You can see I've already favorite these two charts. I don't use aloe candles and bar and the rest. So now, if you go to the line chart, you see a level like this, a V level. So a V level, classic V, it's called a support level, and it's a combination of what, a sell and a buy candle. Then classic A level is called what, a resistance level, and a resistance level, it's a combination of a buy and a sell candle, which is a bullish and a bearish candle printed simultaneously. So the top there is called what, the resistance level. So now we have the open and close levels. I don't know how to break it down. If you go to the main chart, we are familiar with the candlestick, right? This is for a sell, this is for a buy. This level here is called the open and close level. I don't know what's wrong with this, my mouse. This level here is called the open and close level. When you see two the same candle printing side by side. The middle of those candle there is called open and close level, and this level can be used as a support or resistance, depends on the direction of the market. Okay, we can use this open and close level for entry. That's why I target key levels. So we have how many key levels now when it comes to MSNR? So take note, we have A level, which is a resistance level. We have V level, which is a support level. We have open and close level, which can be used for support and or for resistance, depending on the direction of the market. So after these levels, we have entry levels. So in my exercise scenario, we have different type of entry levels. We have ROBS. What is an ROBS? It means that resistance broken turn support. Okay, this is the structure. This is the structure of an ROBS. So what is a resistance? I taught you now that resistance level is a combination of what? A buy and a sell candle. This is a resistance. How to know a valid ROBS? When a resistance is being formed and the next candle came and tapped from that level and there was a rejection from that level, you know that that resistance level has been used and is strong. Then the next candle came and break it with a full body. So it means that this level can be used for support for buy. Okay, you can see the structure. Resistance is what? A level. The market came and tapped it, rejected and broke it, and the market came to give us what? V level. That's I told you V level is a combination of what? A sell and a buy candle. That is V. This is A. This buy and sell, it's A. So resistance broken, turn support. This is the resistance level, right? So we have SBR. I think SBR is opposite of it. SBR is what? It's support, broken, turn, resistance. As you can see, the support level is what? A combination of what? A sell and a buy candle created a support. Markets used that level once there was a rejection, a weak. Then the sell came and broke that support level, and the market came back to that support level and used it as what? Resistance. So a support is a V level broken, used as what? A level resistance. These are key levels, and we have QM, Quasimodo level. I'll talk about that later, but let me just dive into storylines. From storylines, I'll talk about obstacles, then we can start marking our zones on the main chart. So when it comes to storylines, so let's say for instance, I'll be using this level as my resistance level, right? I'll be using this level as my resistance level. Then I'll be using this other level as my support. We already know that support is a B level, resistance is an A level, right? So when it comes to the daily storyline, we have weekly storyline, we have daily storyline, we have 4-hour storyline. So if you're seeing a rejection like this on the weekly time frame, maybe this is a support level, right? This is a support level that was used before, and market reacted from that zone and printed below that resistance level. You can see market tap this resistance level, which is an A level, printed below that level. You go straight to the daily time frame. If you're seeing this structure on the weekly, maybe weekly is rejecting weekly, we call it weekly rejecting weekly, you go straight up to the daily time frame, right? You go straight to the daily time frame. On the daily time frame, you should be expecting what? This structure. We call it QM. You should be expecting this structure on the daily time frame. A break of structure rather. Okay, if you see something like this, this is a high, a low, higher high, and a lower low. And market broke this V level, a structural break. Just know that a storyline for the weekly time frame has been confirmed. So you come back to the weekly to look for your entry and sell. You know that that market is for a sell. So how does a weekly storyline end? A weekly story, a bearish, we call it bearish storyline, right? A bearish storyline ends on that same week when a bullish storyline is formed. Okay, this is a weekly storyline too. On that same week, maybe you see a support level and there was a rejection from that level. If you go straight to the daily, and on the daily, if you are seeing stuff like this, a break of structure, a QM, just know that that's a bullish storyline has been created on that same weekly time frame. So you'll be looking for what buys in the market. You'll not be looking for what sells in the market anymore. So that's for weekly. So when it comes to daily, so on the daily time frame, if you're seeing something like this on the daily, you go straight to the 4 hour and look for this structure. If you can see this structure on the 4 hour, you go to the daily and look for zones to sell the market. The same thing. How does a bearish daily storyline end? On that same daily, when a bullish storyline is being formed or created, then you know that this daily bearish storyline has ended. Do you understand? I'm not really feeling too well today, so I was on live on TikTok. So if you're seeing all the structure on the daily, if you're seeing this, if you're having a rejection both from the daily, market is reacting from the daily reject daily, from the resistance and from the support, go to the 4 hour time frame. Anyone that gives you a clear break of structure, that's the direction you're going to follow. The same thing on the 4 hour. If you're seeing this structure on the 4 hour time frame, you scale down to the 1 hour time frame and look for your breakout. So that's for storyline. So I'll be wrapping up now. So that's for that on MSNR, guys.